Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities continued their positive momentum for the third consecutive week as a softer than expected US core CPI inflation drove bond yields lower, fueling expectation of rate cuts early next year. Asian equities remained mixed, with Hong Kong, Taiwan and Korean equities recording strong gains for the week, while Chinese equities lagged after data for the month of October showed broad credit and fixed asset investments disappointed investors. For the week, the MSCI China, Asia Japan and MSCI World indices rose between 1.2 to 2.9%. In the US, the Dow Jones Industrial Average, S&P 500 Index and Nasdaq Composite rose around 1.9 to 2.4%. Back home, Indian equities gained for the third consecutive week. The Nifty index rose 1.6% for the week, driven by upbeat global cues, declining domestic inflation and improving foreign investor inflows. Broader markets outperformed large caps this week, with the Nifty small cap index up 3.9%, while the mid cap index was up 2.6%. Among sectors, all sectors ended the week in green except for banks, which came under pressure after the RBI announced tighter risk-weighting norms for unsecured lending. IT and realty led the winners with gains of over 4.6% for the week. The Indian fixed income market had another decent week, with Indian government bond yields declining across the curve, driven by easing domestic and US inflation and a sharp decline in US bond yields amid expectation of rate cuts starting early next year. The 10-year Indian government bond yield fell 9 basis points to close at 7.22%, while the 3-year and 5-year Indian government bond yields also fell 9 basis points each, respectively. The INR appreciated marginally against the USD last week to close at 81.26 per dollar, supported by lower crude oil prices, declining US bond yields, weaker US dollar, and improving foreign investor inflows. Brent crude oil recovered from a 4-month low hit during the week to close at $80.6 per barrel, but declined for the fourth straight week amid a rise in US crude inventories and sustained record high production data. Among the other macro updates for the week, the first was on India's CPI inflation, which fell to a 4-month low of 4.87% in October 2023 compared to 5.02% in September and forecasts of 4.8%. Prices rose at a slower pace for pan, tobacco and intoxicants, clothing and footwear, housing and miscellaneous. Additionally, fuel and light costs continued to decline further. Food inflation was little change at 6.6%. However, cost of spices, pulses, cereals, eggs and sugar remained elevated as weather-related disruptions affected the production of kharif crops this season. The second data was on India's wholesale price inflation, which contracted 0.5% year-on-year in October 2023, higher than the contraction of 0.3% recorded last month and market estimates of a 4.2% contraction. This was the 7th consecutive month of deflation in WPI, driven primarily due to decreases in prices of chemicals and chemicals products, electricity, textiles, basic metals, and food products. Prices continued to fall further for fuel and power and manufacturing articles. Meanwhile, primary articles and food prices advanced at a softer pace. On a monthly basis though, WPI went up 0.4% in October, rebounding from an upwardly revised contraction of 0.66% in September, which was the first contraction in 3 months. The third data was on India's trade deficit, which widened sharply to a record high of $31.5 billion in October 2023 compared to a USD 24.2 billion deficit last month. Imports surged by 12.3% year-on-year to a record high of $65 billion, fueled by the sharp spike in global crude oil prices, with gold imports also contributing by rising 5.5% to USD 29.5 billion compared to October of 2022. Meanwhile, exports rose 6.2% to USD 33.6 billion, led by growth in exports of drugs and pharmaceuticals, engineering goods, cotton, and ceramic products. At this point, I'll take a pause and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.